Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, Ukrainian forces carried out their first strike on a border region in Russia using Western-supplied missiles, as President Vladimir Putin approved an updated nuclear doctrine expanding the conditions for using atomic weapons. It was the first known attack following the decision by Joe Biden's administration to approve Kyiv's limited use of the weapons to hit targets inside Russia, and it was 2 months before Donald Trump takes over promising to quickly end the war.
Yeah. We talked about this a little bit earlier. I got to say, for the past week or so, we've been dying to talk with her, and she always finds time for us. She's a go-to for all things Russia, Ukraine, and Vladimir Putin. Back with us is Dr. Angela Stent, senior fellow at the Brookings Institution, a member of the Council on Foreign Relations, former National Intelligence Officer for Russia and Eurasia at the National Intelligence Council. And I got to say, she's also done policy planning at the U.S. Department of State, so much more. She is also the author of Putin's World, Russia Against the West, and With the Rest. I'm still waiting for her next book. She joins us from Washington, D.C. Angela, good to check in with you once again. Why is all of this happening right now? Feels kind of urgent. Read the tea leaves between the nuclear doctrines and what we're hearing and what is going on. Help us out here.
Well, things are not going that well for the Ukrainians on the battlefield. And Zelensky has been pleading with the U.S. to allow Ukraine to use these long-range Atacama missiles to strike inside Russia. The Russians now have 10,000 North Korean troops fighting in the Kursk region in Russia, part of which Ukraine occupies. But now they're saying they could have as many as 100,000 there. So Ukraine wants to survive. It understands that when President-elect Trump comes into office, he is going to push Ukraine to negotiate with Vladimir Putin, with Russia, and that Ukraine wants to be really in the strongest position that it can be if it's going to have to make concessions to Russia. And Russia, on the other hand, Putin feels that he's in the driver's seat. They're doing well on the battlefield. He knows that President-elect Trump wants to make a deal, and he wants to make a deal more than Putin does, because that's what he promised his supporters, the people who voted for him, to end the war. So we're now, we have 2 months more of the Biden administration. And so from the Ukrainian point of view, they would like the Biden administration to do as much as it can to help them be in the strongest position they can be in if they're forced to negotiate.
Is that how you explain the U.S. missiles that were used recently?
I do. Yeah, I do. And I think it's, again, this has been on the table for a long time. The Ukrainians have been asking for this. And now that the U.S. has given them permission to use these missiles, the French and the British have also been supplying Ukraine now with some longer range missiles. So that explains the timing of it. I think a number of us believe it would have been better if they would have had permission to do this earlier.
Why didn't we do it earlier?
Because the Biden administration has always been very concerned about escalation. I mean, you saw with Putin's new nuclear doctrine, this is intended to intimidate, to threaten us. You see some Trump supporters tweeting that we now risk World War III because the Biden administration has allowed the Ukrainians to do this. So Putin revises the nuclear doctrine, says, I'm lowering the threshold for using these weapons. He's trying to stop the U.S. and its allies from helping Ukraine.
Intimidation or the first step to a possible reality? I'm trying to understand. I hear nuclear doctrine or changes or lowering a threshold, and yeah, my spidey sense goes up. So I'm just trying to understand what it really means.
So he would like us to believe that this is a real threat, and that if these weapons keep coming, he might actually either detonate a tactical nuclear weapon, or the Russians have been undertaking a lot of acts of sabotage, particularly in Europe, against industrial installations. They tried to assassinate the head of one of the main factories that's supplying Ukraine, cyber intrusions. So it's all of that. Does he really mean it? Of course, we don't know the 100% answer to that. But I think that what the Biden administration has finally concluded is, if you're too worried about escalation, but then Russia keeps escalating anyway, right, why not let the Ukrainians do this?
Hey, Angela, what's a win for Vladimir Putin? Does it have to mean that they get access to territory that they want?
So the minimum from their point of view is to get the Ukrainians to recognize the annexation of these 4 territories that Russia claims to have annexed, but it doesn't fully control. And they want Ukraine to promise that it will never seek to join NATO. And they're calling for the demilitarization of Ukraine, because Ukraine now has a very strong military. That's what the Russians want. And if you look at the plan that, Vice President-elect J.D. Vance put out, it's rather similar to that.
So let's talk a little bit about where this goes and how it ends, because it has been 1,000 days. And every time we get a chance to speak to you, I ask you the question, how does it end? But a lot has changed since last time I asked you that question, including President-elect Donald Trump, along with J.D. Vance, the promises that they made on the campaign trail, and also what Putin has threatened and what Ukraine has been able to do. So now, given all that, how does it end?
So it probably does end with negotiations. I mean, the Russians may be willing to sit down and negotiate. That doesn't mean they actually want to conclude negotiations, because they want to keep hoping, they keep hoping that Ukraine will become weaker. And of course, if the Trump administration stops supporting Ukraine, either financially or also with weapons, then the Russians could get their wish fulfilled. So I think it ends probably with a negotiation and with Ukraine having to make some territorial concessions. But the question is, what will the Ukrainians get in return for that? And they really need to have very robust security guarantees that they will be able to withstand and deter another Russian attack on them, which will certainly come if they don't have these security guarantees. And this is where it becomes very complicated, because the only security guarantee that for them to ensure that Russia can't invade again would be NATO membership. But clearly, this is not something they're going to get with the incoming Trump administration.
I mean, all of Europe has got to be watching, all of the world has to be watching in terms of what Vladimir Putin's intentions are. And that is kind of, putting back together what the Soviet Union used to be. So having said that, is there any real guarantee? Can you trust the word of Vladimir Putin that if he says, I'm done, but he really is probably not in terms of future invasions?
Right. When you can't, because you know that his goal still remains to change the government in Ukraine, to have a pro-Russian government, and not to occupy Ukraine, but to really subdue Ukraine. That's been his goal since February 24th, 2022. And as long as he's in power, or someone like him is in power, Russia probably won't stop unless it's properly deterred. And that's the real challenge.
How do you think about, a Donald Trump in the White House potentially having to still deal with this situation? I mean, are you assuming that he's going to have to figure this out? It's not going to end before he gets to the White House? And if so, how do you kind of game out what seems to be a like relationship between Donald Trump and Vladimir Putin? I'm not quite sure how much is what we see or what we hear versus what the reality is, but how are you kind of gaming that aspect out?
Well, we know that the war isn't going to end before he gets into office. And I'm watching Putin very closely, because on the one hand, he congratulated Trump a few days after his election. He said he was brave to the way that he survived and dealt with his assassination attempt. On the other hand, if the Trump people said that there was a phone call between Trump and Putin, the Kremlin denies it. The Trump people say that Trump asked him not to escalate. Well, he's escalated. And the very week that they had, that he congratulated Trump, one of his favorite TV propagandists, a woman, on her nightly talk show, they had a very derogatory and salacious report about Melania Trump. So how do you figure that? That's almost trolling him before he comes into office. So I'm watching for these signals and seeing how the Russians play this out.
We only have about a minute left, Dr. Stent, but I'm wondering what all of this means for Eastern Europe and for the continent in general.
Well, I think that the Eastern Europeans realize that they may be on their own. They may face, if Russia thinks that it's winning, they can face more threats from Russia. I think Europe as a whole understands that it's going to have to do more for its own defense. But the problem is they're not completely united on all of this. For instance, the Germans won't supply the Ukrainians with the long-range weapons. And of course, the German government's collapsed, and we don't know what the next German government will do. So it would be better if there were European unity, but certainly those countries, Poland, the Baltic states, the Brits as well, but those countries on the front line are really gearing up to do as much as they can to prevent Russia from moving further west.
Angela, 10 seconds. This war, does it end next year?
I don't know, but it's probable that it will end next year.
All right. Thank you, as always. We know you're busy, but you always find time for us. If we don't talk to you before the end of the year, have a good holiday season. Dr. Angela Stent, Senior Fellow at Brookings, member of the Council on Foreign Relations, perfect person to talk to about this.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, folks, Ukrainian forces carried out their first strike on a border region in Russia using Western-supplied missiles as President Vladimir Putin approved and updated a nuclear doctrine expanding the conditions for using atomic weapons. It was the first known attack following that decision by President Biden's administration, the U.S. administration, to approve Kyiv's limited use of the weapons to hit targets inside Russia, coming 2 months, as you know, before President-elect Donald Trump takes over, promising to, I guess, quickly end the war, although I keep hearing about escalation, Tim.
The crisis continues, perhaps escalating, as the G20 summit of world leaders gets ready to wrap up today in Rio de Janeiro. And another crisis averted as the family photo has been redone. Watching it all from the sidelines and front and center, Bloomberg News correspondent and host of the Big Take podcast, David Gura, on the ground at the G20 summit in Rio de Janeiro. David, 4 p.m. in Rio, top of mind for us has been the war between Russia and Ukraine. Moscow's new nuclear doctrines, Russia's foreign minister saying the attacks by Ukraine using U.S.-made missiles to strike Russia overnight signal that the U.S. wants escalation. What are you hearing from the front on the ground?
Does it feel stressful out there?
Yeah, we'll get to that. It does. We'll get to that family photo in just a little bit, but let's start with how this news sort of reverberated throughout the summit and began very early this morning. So as you mentioned, the foreign minister, Sergei Lavrov of the Russian Federation, came out early and did a press availability, talked to reporters. Most of that was in the Russian language, but he reserved the final few minutes to speak in English, and the audience here were the leaders of Western countries. And so he delivered that assessment. This was an escalation of the war in Ukraine, this move for the U.S. allowing those weapons to be used on Russian territory. And he also had a very stern warning to those Western leaders as well. He urged them to read that new nuclear doctrine. And this is basically the way that Russia thinks about when it might use nuclear weapons. So the change that they've made, that country has made, is if a non-nuclear power, which Ukraine is one, were to use weapons to attack Russia in concert with a nuclear power, here that would be the United States, Russia would have grounds to retaliate. So that's a pretty extraordinary move and pretty heated rhetoric from the Russian foreign minister. Now, we waited to see how that would play out, what kind of response we would get from the Americans, and we had a National Security Council official telling Bloomberg News that the U.S. plans to make no changes to its own nuclear doctrine. So as all of this has unfolded over these last few days, you see the U.S. trying to infuse a bit of calm into this, but it's certainly something that's occupied a lot of time and attention and interest from these world leaders here on the final day of this summit. And there have been, as I said, a lot of these bilateral meetings. A big one was between the German Chancellor Olaf Scholz and President Xi Jinping. Olaf Scholz had spoken with Vladimir Putin, the president of Russia, in recent days. So President Xi, like so many world leaders here, eager to sit down with the German Chancellor to get a better sense of what he heard from the Russian president, what might be an off-ramp in this crisis in Ukraine at a time when it seems like things might be speeding kind of full speed ahead in a different direction.
David, these nuclear doctrines, changes, no changes, escalation, not escalation, is it just verbal jockeying? Is it just verbal threats? Or is it something that the world should kind of sit up a little bit straighter and take notice?
I think it's the latter, but if you listen to the Americans and how they view this, what they're saying is, look, this is to be expected. There has been this conversation swirling around the war in Ukraine for a long time. Kyiv has been adamant that other Western countries supply them with better, more sophisticated weaponry, and because of that, Russia was likely to make this kind of change to its nuclear doctrine. So I wouldn't say that it's business as usual here, but it's something that I think the U.S. is telegraphing is kind of expected. They expected this to happen, and what's happening is it's in the crucible of what we've seen over these last few days, which is this escalation of rhetoric. We saw the big attack from Russia on Ukraine just a couple of days ago. Obviously, this announcement by the U.S., this announcement the U.S. has allowed those weapons to be used is one that sort of ratcheted things up even more. But the U.S., again, playing this as though this is something that was kind of preordained or destined to happen here in light of what's been going on over these last few months, Carol.
All right, so my understanding, I think I heard you earlier on Bloomberg Television, or maybe it was on Balance of Power, that Joe Biden headed home or has left. Where are we in these meetings, right? They're wrapping up, and I guess, is there kind of a net narrative, net takeaway from all of this?
They are wrapping up. Joe Biden is making his way back to the United States after the conclusion of this summit. There are still some press availabilities and meetings that are taking place. And I should say President Xi is traveling to Brasilia after this for a day of meetings with President Lula here of Brazil. So there are leaders who are staying in this continent and having meetings and conversations about trade relationships and other deals going forward. I think the broad takeaway from this is that we've seen kind of a traditional G20 unfolding here, at least on paper. We hit all the agenda items that you'd expect to see at a big multilateral meeting like this on issues of trade and climate and development financing. But we've seen this big event kind of overarching it. And I think this concern about sort of where things are headed, particularly with the conflict in Ukraine, to an extent with the conflict in the Middle East as well, and this massive variable, Carol, that's just looming large here, which is what's going to change in a couple months' time. Joe Biden had this diminished role here at this summit, tried to make the most of it, tried to sort of spell out the contours of his legacy, convince a lot of these global partners that there's some policy foundation in place here that could stabilize the global systems going into this next president. But he's aware, all the people here are aware, that come January 20th, a lot of that's likely to go out the window. And
I should point out that a little bit later on in our next hour, we're going to check in with Angela Stent, someone who's been also another go-to to us on the Russia-Ukraine war. She was a national intelligence officer for Russia and Eurasia at the National Intelligence Council, and she has done a deep, deep study into Vladimir Putin. So a little bit more coming up in our 3 p.m. hour.
Yeah, that happening right at the top of the hour. David, perhaps that's a good place, a good segue to get to the family photo, which we talked about earlier, and we talked a little bit about yesterday. And it's sort of a lighthearted thing, but also at the same time, it's very symbolic, and there's a lot of meaning that happens, especially with the transition that's happening right now. What's an update there?
Yeah, it is a huge part of these events, and so there was some embarrassment on the Brazilians' part that this happened, at least publicly, and what we heard from President Lula is this is Joe Biden's last G20. It would not be fitting for him to go home without that memento, without that formal photograph of him with these other leaders here at the G20. So after lunchtime here in Rio, they brought everybody back. They took that photograph. It's funny, you can see President Biden there flanked by Prime Minister Justin Trudeau, Prime Minister Giorgia Meloni, who were also absent from that photograph yesterday. They kind of looked like chastened school children in the class photo. They're there now. The photograph does exist. There was some speculation yesterday. Was something amiss? Was there something greater than President Biden just being late for that photograph? Did he not want to be depicted with Sergei Lavrov, the Russian foreign minister? Both sides trying to put those rumors to rest. Seems like it was just a scheduling snafu here, but one they definitely wanted to rectify before Joe Biden made his way back to Washington.
We all definitely have our family photo stories to tell. Hey, just one last question. Is this a new era for the G20, David?
I think that that's likely to be the case. I mean, something we're watching here are the way that these countries are interacting with one another. This is an alliance, a group that was born out of a U.S. and Canadian desire to get these countries together. The U.S. has always had this kind of marquee role at the vanguard of this gathering, getting folks together. I think that it's likely going forward, in light of what we've heard from former President, now future President Trump, who really doesn't prefer these multilateral gatherings, like things to be done on a bilateral basis, that the shape, the contours of the G20 are going to be different going forward. Be interesting to see sort of how this shakes out when they meet again next year in South Africa.
David, I'm just going to say great work. Great checking in with you. You are, I guess, almost done. That beach, I've been on it. It's a really nice place to hang for a little while and read a book. So just some
He's got a lot more work to do, just so you know.
I'm sure he does. Bloomberg News correspondent David Gura there in Rio de Janeiro at the G20.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I gotta say, it's safe to say it feels like there's a new narrative going on, man, because lots of folks are coming on to talk small caps and how now is their time.
I feel like this week we've already had 3 people talking small caps, and it's only Tuesday.
Makes me a little nervous, but then it does, because when everybody's kind of piling in, I'm like, wait a minute.
But look at what's happened over the last 10 years. I mean, small caps have underperformed mega caps.
And this next guest
large caps
likes mid caps, likes small caps, and has an impressive long-term track record to go along
with
it.
We got with us Ryan Kelley, Chief Investment Officer and Portfolio Manager at Hennessy Funds. Ryan co-manages the Hennessy Cornerstone Mid Cap 30 Fund. Its return on average nearly 24% annually. Carol, it puts the fund in the 98th percentile, so beating pretty much just about everyone in the sector. That's according to Bloomberg data.
That's a flick. You can do that. All right, Ryan joining us here in studio. Hey, so good to have you back with us. How are you?
I'm doing great. Thanks for having me again.
Well, it's great to have you here. We do want to talk about what's in the fund. You just recently finished up a rebalancing. You do it once a year. But I want to ask you, is there anything in the macro environment, the outcome of the elections, that has shaped maybe where you wanted to invest for the coming year?
Yeah, I mean, I think a couple things going on here. Just getting back to the small and mid versus large.
Yeah.
There's so much of that debate out there. So much of the large cap stocks are just dominated by the Magnificent Seven. Still. And Nvidia, reporting tomorrow. So far this year, 25% of the S&P's returns have been from Nvidia. So one stock doing that much good, and maybe sometimes that much damage to one particular index is a lot. So we like the small and mid-cap space because it's not as susceptible to a lot of, there's not mega caps that'll take over the index. It's trading at a better valuation. Certainly some changes that are supposedly upcoming with less regulation, better corporate tax rate. That's going to benefit some of these companies as well.
Tariff policy?
Tariff policy could actually eat into some of their earnings for some of these mid-cap stocks.
What's of those things you mentioned, what's actually priced in right now in your view? And we'll talk about some of these individual names soon, but the administration is in transition.
Yes.
So we know the makeup of Congress pretty much. Mm-hmm. What do you think they'll be able to get done? So therefore, what is priced in?
It's a very tough question. I would say that tariffs are not completely priced in because I think there's still a disbelief that we could get to some of the levels that have been talked about. I think that personally would be very detrimental to the economy overall, and I hope that sort of more level heads come up with maybe a better plan. Mm-hmm. But if that is the case, we're getting the kind of tariffs we're talking about, that really could hurt, I think, some of the longer-term earnings of some of these companies.
All right, let's get to it, because I want to talk names. Your fund is up 37% year-to-date, 98th percentile. You've had a great 5 years for the fund as well. You pretty much are beating your peers. So kudos. We like to talk to people who perform. Mm-hmm. Your strategy, it's a one-year rebalance. You reminded me when you sat down here in our studio, you just finished a rebalance. Tell us about that rebalance. There's 30 names, and you said only 2 have stayed in the portfolio from the past year. Yeah,
so what we do is we really want to make sure that we're just going to continue to follow the same formula year in and year out. So this fund is 21 years old. It has been done the exact same way since inception. We use a very disciplined process. That's actually on our website. You guys could go look at it.
Yeah.
Every viewer could go look at it. The formula is listed there on how we do it. But the idea is that once a year, we'll look at all the portfolio, and we'll look at the universe of stocks out there. And
it's a lot to look at.
It's a lot, and so it's a quantitative based, it's a formula based.
It is.
Fund.
Okay.
But it's based on fundamentals going back for many decades. When this was first put together, they looked back at 3-4 decades worth of data to see what really works on Wall Street. And so what we do is we look for companies in the 1 to 10 billion market cap range. We look for a low price to sales, which is an interesting metric because most people use PE or EV to EBITDA or whatever. We look for a low price to sales of less than 1.5 times.
So it almost thinks about some valuation that hasn't been recognized, right, as a result?
A lot of times
of the top line.
You'll get companies that are in a bad part of the cycle or that are underperforming. That are about to turn. And the reason why we're okay doing that is that another important part of the metrics is we're looking for momentum. So we already want stocks that have turned. We don't want to buy a undervalued company that has a lot more to go on the downside, but rather buy a company that's a good company, that's out of favor, that's on its way up.
So one of your old holdings, that was one of your biggest holdings, was Sprouts Farmers Market, up nearly 200% year to date. It's trading near an all-time high. You said bye-bye?
Yes, so that in this most recent rebalance, it then moved way above our price to sales of 1.5 times. Only about a third of companies out there that are publicly traded trade below 1.5 times, so it's a pretty restrictive number. And that went way above it. It performed very well for us, but now it's gone.
Okay, let's talk about some of the names that you're adding.
Yeah.
One name that I think a lot of people would be surprised to hear would be Peloton.
Yes.
This is a company that has faced incredible pressure since the pandemic.
Yeah.
Why are you optimistic? Why are you bullish?
It comes down to the formula first and foremost. It fits. It trades at 0.7 times price to sales. We bought it around, we were buying it around the $5 to $6 mark. It's now approaching $8. So it has had a bounce back. They're starting to improve on their cost side. A new CEO is always an important and potentially beneficial. It's certainly challenging, but we've seen that type of turnaround before. Believe it or not, Crocs. We owned Crocs when nobody wanted Crocs, and now all my children wear them. We owned Restoration Hardware when people were not going. Nobody's going to go to a store anymore.
Yeah, that's what you have.
And then
like
they became. It was an incredible turnaround story. So there's a lot of. It may not come down to this particular name working the best, but it's just a representative holding of what we'll own. And the idea is you'll get something that's completely out of favor, that's beat down, that maybe has a second life.
Tell us about Herc.
So Herc Holdings is, when we did the rebalance this year, we did find that there was a whole lot of consumer discretionary and a whole lot of industrials. And Herc is an equipment rental company, essentially.
Okay.
So
ticker is HRI, and it's up about 45% this year.
Mm-hmm.
Cool.
So that this is typically what we do. We catch something as it's already gone up. We don't want to try to buy it on its way down.
Yeah.
And with the idea
you're okay that you've lost some of the momentum.
We're okay. We'd rather not try to time the bottom, but participate once it turns.
Are you using AI at all now in your analysis?
No AI. This is.
Wait, you're not?
I have to say this is so simple that it's almost too so, and I come from an analyst background where I had to know.
You know, for the last year and a half, that's all we talk about is AI. But go ahead.
I came from a background where I covered banks. I didn't know how old the CEO was, where he went to, where they went to play golf, all these kind of intricate pieces of data. But this is really, it's fundamental quant is what it's called. And the idea is you really just want to boil it down to very simple metrics and just stay with it year in and year out. And it's worked.
Tim, if you don't know, loves to eat a lot. He just finished a sandwich.
It's still got some left if you want some.
It'll come up. Brinker International is another name that you like. EAT is the ticker. Love that. It's up 183%, but you've got it in the portfolio for the coming year. So there's more momentum to the upside. Got about 30 seconds.
Mm-hmm. Yeah, so EAT, Chili's is the name brand. Also Cheesecake Factory. Both of those are two restaurants that are now in the portfolio. Again, it's the same sort of situation we've looked for all these companies.
Cake is up 33% this year.
And you look at these names that we add in, and an example that worked really well is Super Microcomputers we owned, and we owned it as it went completely up until it didn't, and we actually got rid of it because it was too expensive. So
who needs AI? We just need Ryan Kelley. Ryan, good to see you with you. Have a great holiday season. He is the Chief Investment Officer at Hennessy Funds.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, everybody, time for another edition of Bloomberg Plugged In, your weekly look at EVs. President-elect Donald Trump's incoming administration looking to slash fuel efficiency requirements for new cars and light trucks, all as part of plans to unwiden President Biden's policies that he has blasted as an EV mandate. This is according to people familiar with the matter.
Okay, so the policies don't explicitly order EVs. Critics argue the rules are so strict, though, that they act as this de facto requirement to sell EVs in large numbers, especially for later years. So lots of stuff to talk about with Garrett Nelson, Vice President and Senior Equity Analyst at CFRA Research. He joins us from Richmond, Virginia. Garrett, we're going to get to some of your picks in just a minute, or your views, I should say, on these stocks. But big picture, we haven't had a chance to check in with you since the election. Big picture, how does a Trump administration change your view of EVs?
Well, one thing we think that's changed is that we can say with almost complete certainty that the federal EV tax credit will be going away when new tax legislation is passed, likely next year. All you have to do is look at the 20 agenda items listed in the 2024 GOP platform, and one of them was canceling the EV mandate and cutting costly and burdensome regulations. And we think, given the Republican election sweep, we think that means an elimination of the federal EV tax credit program. And to the surprise of some, Tesla, of course, the largest EV manufacturer and seller by far, has actually been advocating for the elimination of the EV tax credit. And we think it's because they think it will hurt the EV sales of their competitors more than it will hurt their own sales. And so it will widen their competitive advantage over other automakers.
Huh. Okay. So not that big of a deal for Tesla, but a bigger deal for other companies.
That's right. And, we agree with that. We think, consumers really factor the EV tax credit into their buying decision more for other EV models than for Teslas. The Tesla just has a, more established brand, and customers that really aren't as, because they generally sell luxury EV models, we don't think buyers are really dependent on that EV tax credit to make their purchase.
Interesting. I mean, take a step back. We know that the EV story, people are still buying EVs, but they're also now buying hybrids in a big way. And so, the market hasn't disappeared, but the growth numbers have certainly pulled back. So when you look at the transition to EVs still going to happen? I mean, how do you see it kind of bigger picture here? I mean, China is all in and they're producing some really less expensive models, which I think it's safe to say there are a lot of Americans would like to have a lot more choices that are less expensive.
Yeah, we think it might be a surprise to a lot of your listeners to know that the hybrid market is both larger and growing faster than the pure battery EV market in the United States. And so we think what's going to happen is that traditional automakers are going to invest more in hybrid development than EVs and really pull back on their EV growth plans. So, but it really varies by automaker. You look back 3 or 4 years, and each automaker really took a different strategy. A lot of the Japanese automakers, such as Toyota and Honda, were never big believers in electric vehicles, and so they invested a lot more in developing hybrid models. And we think they're going to really reap the benefit over the next few years in terms of market share gains compared to companies such as General Motors, who really made an all-in bet on EVs as the future of the U.S. Auto market.
Okay, speaking of folks who are going to be beneficiaries here, let's talk about Tesla. Because you guys recently raised your opinion on shares of Tesla to buy from hold.
Is this a Trump trade?
That's what I'm wondering.
It is. So much of Tesla's future depends on getting approval for autonomous driving. And when it became clear the election result, and given how much Elon Musk had invested in, not only President Trump but other candidates, he really has. Major influence on the regulatory framework for autonomous driving going forward. Of course, they had the Robotaxi Day last month. They said all their future vehicles will neither have steering wheels nor pedals. And instead of a very lengthy state-by-state process in terms of getting approval for autonomous driving, you're looking at a single framework run by the Department of Transportation, which could supersede that. So it really, we think, moved the time frame up by perhaps a matter of years. Just the fact that of what happened with the election.
Are there other numbers? I mean, you've got to sell on Rivian, so going in the other direction. Tell us about that one. You've got a 12-month price target of $5 a share. Let me just pull it up on the Bloomberg. We've talked about it a lot here. It's down about 56% year to date, trading right now at 10 and change. So you're talking about, a 50% haircut here. What's the future of Rivian in your view? It doesn't sound pretty bright. Doesn't sound.
No, Rivian is one of a handful of smaller EV manufacturers that just doesn't have the size or scale to compete longer term. The company will probably produce and sell less than 50,000 vehicles this year. You compare that to a company like GM or Ford or Tesla, all of whose sales will likely exceed 1.8 million units this year. So they're just a fraction of the size in a very competitive global industry. And the auto industry historically has had a very high failure rate because capital costs are extremely high, it's difficult to achieve scale, and it's very competitive. And already we've seen a number of bankruptcies recently in the EV space, looking at Lordstown, more recently Fisker, And, Rivian's burning cash at a rate of about $1 billion a quarter. So, you look, this company still had a little more cash than debt on the balance sheet, but given that cash burn rate and really what they have to do to achieve scale is build a new factory. They want to do that in Georgia. The cost of that new factory is going to be about $5 billion. So they're in a very tough position.
Is this a company that is at risk of the worst?
Are you going to say the B word?
Yeah. I mean, Elon Musk talked about this for years, Garrett. He's talked about how difficult it is to create a car company in America, how very few car companies in the last 50 years in the U.S. have actually succeeded. I think the number is only Tesla at this point, he says. I mean, you have Rivian out now, too, and a few other. But it's a really tough market.
Yeah, in fact, Tesla is the last company since Chrysler. And that was back in 1925.
That's the stat. Thank you.
Yeah, so that shows how difficult it is to survive in this industry. And so we've seen a number of bankruptcies. I mentioned the two companies. I think you're going to see more, over the next couple of years. So, they're in a very difficult spot. They did reach a JV agreement with Volkswagen that gave them a nice lifeline, $5.8 billion cash infusion. The stock had a little bit of a rally on that, but fundamentally, we don't think it changes a whole lot.
Where do you think the EV space is in? I'm not quite sure even what the smart time frame is to be thinking about. Is it 3 years? Is it 5 years? When is there another kind of significant narrative around EVs in your view?
We think it's when EVs really come down and they're closer to price parity with internal combustion engine vehicles. As it stands today, last month, the average EV was 17% more expensive than the average of all vehicles in the United States.
Yeah.
And so you look a year ago, that premium was only about 8%. So that gap is widening. It's not going to help with the EV tax credit going away. And also, oil prices expected to fall. You look at the EIA forecast where they expect oil prices to go. EVs really benefit from when oil prices are higher. So, there's a lot of headwinds, facing EVs, as well as increasing competition. Traditional automakers are still planning on bringing a lot of EV models to market.
Hey, Garrett, before we let you go, we got a couple minutes left. The president-elect, Donald Trump, is actually headed to Brownsville, Texas to go to SpaceX's Starship 6th test launch. We're going to bring you that live when that happens. But it shows the close relationship that Elon Musk and the president-elect have. And I'm wondering how your view on Tesla would change if that relationship in some way became fractured.
Good question.
Yeah, that's a good question. There's all kinds of questions regarding potential conflicts of interest. Elon Musk's new role as an advisor at the Department of Government Efficiency. Obviously, SpaceX has NASA significant NASA contracts. We really think of it, more as a Tesla angle, from a Tesla angle. What does it mean for Tesla? And we think, really anything that threatens his future at the company is of concern to us, because the stock trades at a massive premium to the industry. And we think a lot of it is just because of Elon's presence at the company and a belief that he will continue to create value for shareholders over the long term. So when things happen that threaten or question, his position at Tesla as CEO of the company, that's what really concerns us. So, that's really what we look for.
All right, we're going to leave it on that note. Garrett, great to catch up with you. Covered a lot of ground. Garrett Nelson, Vice President and Senior Equity Analyst over at CFRA Research, joining us there from Richmond, Virginia.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we are just 18 minutes away from the closing bell on this Tuesday. And as Charlie just mentioned, we're pretty much hovering, at least on the S&P and the NASDAQ, near our highs of the session. But we are still seeing a little bit of a loss on the Dow Jones Industrial Average. So let's get to it, our drive to the close. Andrew Krei, he is Co-Chief Investment Officer of Crescent Grove Advisors. He joins us here in our Bloomberg Interactive Broker Studio. Welcome, welcome. How are you?
I'm doing well. Great to see you both.
Tell us about Crescent Grove, who you guys are managing money for, how much you've got under management, and what's top of mind for your investors right now.
Sure. About a $5 billion RIA, mostly focused on private wealth, ultra high net worth.
Everybody's focused on private wealth.
It's the place to be.
There's a lot of money there, I guess.
There's plenty of money to be managed.
Ultra high net worth, so give us the typical portfolio size.
Yeah, so our sweet spot's going to be, call it 20 to 100 million. And it's going to be sort of endowment-like in the way that we invest. So diversified across asset classes, a healthy slug of illiquid asset classes, private markets, but built sort of from a generational wealth perspective, right? These are long-term portfolios, kind of long-term in orientation, diversified, and top of mind, the election, right? I mean,
all right, so what changes?
How could it be anything else?
What changes for your investors? Like, do you make moves coming off of the election outcome, or just too soon?
No, I mean, long-term in focus, right, is the emphasis in terms of how we're thinking about these multi-generational. I mean,
if you're investing in private credit, you ain't getting out now.
Well, that's the other thing too, right? Yeah, you make these illiquid bets, and you're counting on these managers to try to navigate as best they can. But in some cases, the money's in the ground. You know, you're in private real estate, you're in private equity, those sorts of things. There's not a whole lot you can do beyond just trusting these managers to work with their portfolio companies to navigate the conditions as best they can. So absolutely, you're not tweaking those allocations, but everything else, you know, the questions come up. Well, what do we do? You know, do we need to make meaningful changes right now as things are unfolding? And for
anybody want to move to cash? Cash-like?
Yeah, we've had some folks, you know, express concerns about the near-term potential for volatility over the next several years. And you know, in some cases, you say, all right, let's take some chips off the table. We've had a great run, mega cap tech. You know, let's use that as a funding mechanism to put together kind of a liquidity reserve. And if that makes you feel a little bit better and sleep at night, and we can set aside a few percent of the portfolio, so we've got the next 12, 24 months of expenses covered, and then we can let the rest of the portfolio do its job and think in that sort of long-term fashion, then sure, that's a compromise we're willing to make for those types of clients.
So you're from Tennessee, but you ended up at the University of California, Los Angeles?
I did, yeah.
Were you in California then, or did you go from Tennessee to UCLA?
I went Tennessee, LA, New York, Chicago, Grand Rapids, and then UCLA.
Okay. But were you in state at UCLA, or were you out of state?
No, out of state.
So there's...
Is there a method to your madness?
That's pretty rare.
Okay.
Especially these days.
What? Yeah. Going in and out?
I mean, yeah, well, the UCs are like full of Californians and international students.
Oh, okay.
But these are schools that are a ton of Californians go there.
They need somebody else to subsidize the California in-state tuition, so they let in people like me from West Michigan. I'm convinced that I was like one of two applicants, and it just happened to be barely better than the other.
And now you're in Milwaukee.
Yeah, exactly.
And you're here in the Bloomberg Interactive.
You're like this Andrew Krei guy.
We love it.
He's from Tennessee. Let's throw the dice and try this out.
Yeah, exactly. Right.
I love it. You know, you got to understand the person's full story.
No, I totally agree, and I always love that you go there. Having said that, I feel like when it comes to
diversity, some real questions now.
No. But like diversity anywhere is usually a good thing. Diversity of thought in the investment universe. We're at a moment in time, right, Tim, where it feels like everybody's coming on and saying, buy small caps. I'm just curious, what's your thinking about the diversity of thought, being smart, looking for the alpha, like how you go there?
Sure. So a lot of the alpha for us is in private markets. I would say, you know, that's an area where we've
Thanks for all of us peons.
Right, yeah. So that's where we spent a ton of time over the last number of years.
Speak for me, not for you.
Hey.
Really looking to find structural inefficiencies that can be exploited on a repeatable basis by managers that tend to be, you know, from our perspective, a little bit smaller fund sizes, more niche in their orientation.
Are they still attractive? There's no nervousness about exits and kind of what happens here? And
well, there's kind of the denominator effect, so to speak, you know, and you've had this issue where these private allocations have kind of grown as a percentage of the portfolio. Certainly, you go back to 2022. Yeah, I mean, the valuation piece, that's become a little bit of a concern in some areas of private markets. But you know, one area we might point to would be real estate, where they're actually, I think the converse might be true. There are people that have kind of run away or taking a step back and saying, we're not going to put new money to work right now. So for us, that's an opportunity to lean in, you know, look at some specialty segments of real estate potentially.
So what happens?
Is it the Bank of America Tower or Brookfield?
Yeah, that's in LA.
A couple of properties that are on sale right now.
case in point, the opportunities
we talked about
for
that
the right
yesterday.
people.
What are the opportunities in real estate, though, that you guys are going after for your investors?
Sure. So what I would say the big thing for us on the horizon is a big maturity wall. So think about all these developers that were either developing or buying properties, value add type investors in 2020, 2021 at very low rates. They've got loans coming due, and they've kind of been sitting and knitting and waiting and saying, well, we're going to see a normalization of interest rates. We're going to see valuations come back to where they were, and so we're not going to do anything. We're not going to hit the bid at this point in terms of transacting. But now they're going to be forced to, because they're going to have to reckon with a bank that's coming to them and saying, either you need to re-equitize this property, you need to come in and bring some preferred equity in behind where you sit from an equity perspective, or you're going to have to transact at a level you don't like, but that creates a ton of opportunity for buyers.
On the public equity side right now, when you're building that portfolio, let's say new money comes in, where are you putting in terms of equities?
Yeah, I think today, sitting here, a new dollar going to work, the fear is that the unknown, the ambiguity around what trade and tariff policy is going to look like. So I think for us, kind of the key narrative underpinning markets right now is one that's more focused on U.S. assets and sort of a home country bias for now. So
at least at the large cap side, things are very expensive.
Without a doubt.
Yeah.
Right. So we would say mega cap tech versus everything else is kind of the high level taxonomy. Right. We like the everything else bucket at this point. We'll see what NVIDIA reports tomorrow in terms of their earnings, and that being sort of a lens into
your investors want to be in NVIDIA?
Well, they like the idea of participating.
They wanted to be in there 2 years ago or 10 years ago.
But
didn't we all?
Yeah.
The AI theme, I think, continues to be a popular one, but at what price? What valuation are you willing to pay for that?
Yeah.
So for us, I think it's just more of a relative value blocking and tackling portfolio management exercise, right? Where we take some chips off the table and look at some things that are less demanding from a valuation perspective.
Got to ask you before you leave, 30, 40 seconds here, the fixed income play here. I think we're all trying to figure out, there's concerns about spending, what this means in terms of inflation, what it means for the Treasury trade. What's the fixed income play right here?
I think it's more likely than not upside bias to yields at this point, although we are at a more balanced level for sure.
Above 5% on the 10-year easily?
I think we could touch 5 again, go back to kind of where we were at the end of last year for a period of time where we touched it and bounced back, but it feels like kind of 4 to 5% is going to be our range on the 10-year at this point. If we do see meaningful surprise from a growth perspective, if that ticks up, if we see inflation actually tick back up and inflect higher, then I think you start talking about 5+.
Where do you want to be on the curve?
Yeah, so
or fixed income.
Yeah, I would say for us right now, it's a little bit more of a focus on credit. So IG high yield credit, which really is a function of the pro-growth environment, the strong corporate balance sheets and corporate health. Going forward, why not capture that incremental spread, take advantage of that if we don't think defaults are really a meaningful risk.
As long as things stay good, right? The economy, you got to make sure things are going good.
That's right. That's right.
Mega defaults. Fun. You kept up with us.
Try to.
I didn't.
It was a little bit of a
I was
volley.
just hanging out.
I know you were. No, you were. You kept up. Andrew Krei, Co-Chief Investment Officer, Crescent Growth Advisors. Thank you.
Great to be here.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.